It's a great day for a strategy Sunday as we go over a 15-minute based strategy that is going to be only using free indicators. So that means that if you have a TradingView account, which is free itself, you can employ the strategy, well, with no remorse, with no unnecessary private indicators. These are all freely available on the public library, so you can employ it just about immediately. What is not included, however, is the automation features. Of course, if you want to automate a strategy like this, then you could use one of the tools in the link in the description below, the Krown Quant automation, and you can automate strategies like this or many other strategies as well. Many of which several of which I've posted here exclusively for YouTube as well in this playlist. So here we go. This is the equity curve over the past 3 years. This is back tested from January 1st of 2021 to current times. The reason why I picked this particular date range is because it encompasses basically all the different portions of the market cycle that you're going to run into. You have 2021, that's your parabolic bull cycle. 2022, that's your parabolic bear cycle, plus maybe some black swans in there with FTX, Luna, and all sorts of things, 3AC. And then you have 2023, which is the turnaround, not necessarily a full-on bull market, but a consolidationary / general upside market within an overall long-term consolidation. So it's been tested through many different things and has acted pretty acceptably here. My sort of means of deciding if a strategy is good or not is if the equity curve is up and to the right. It's very simple, actually, with higher lows the whole way through. And that's what we see here, even in 2022, where you can see that things did take a dump off there. There certainly was some bigger losses, and it did give up, some decent gains for sure. Ultimately, it did create a higher low on the equity curve, and well, long term, the trend remains, and it remains your friend. So what's the big deal here? What are we going to be using for this? Like I said, these are all freely available indicators on the public library, and what we're going to be using is the PMARP and the BBWP. That's it, nothing else. Just really fucking simple. Both of them, like I said, you can get here for free. Just type in BBWP, boom, it's one there by the man, Mr. Caretaker, and then we have PMARP, also by the Caretaker. Very easy to get. And like I said, freely available, but I didn't repeat myself damn enough right there. All right, so first things first, settings for these indicators specific to the strategy. The PMARP, we want to have a PMAR length of 21, an MA type of EMA, and then for the signal moving average, we want to have a 20 simple moving average, and then also just make sure that this is PMARP right here as well. That's it. And then for BBWP, we want to make sure, I believe these are default settings, by the way, but just to ensure that everything's correct, price source close, basis type SMA, length 13, look back 252, and a simple moving average type of, a simple moving average length of 5 right here. All right, once we have those in place, we're ready to get into the boring part of this video, which is the trade strategy and checklist, just the most basic format of filling out how to fucking do your strategy. It's always funny whenever I post a video like this, or even in the Discord sometimes, like, people ask, can I get that trade checklist? Like, it's pretty fucking simple, man. You can just make it yourself. It's all good. Just doing this on Google Documents. Very simple. Very, very simple. Put in the minimum effort, maybe. Kidding. Well, maybe not. Anyways, okay, so first things first, what time frame we looking at? 15-minute time frame. What is our main source of edge? We just went over this. PMARP and BBWP settings are here as well, if that helps you. And then what defines a risk management parameter? So if we do want to have like a hard stop, then it would be a max 3% stop loss. That is what this strategy over here in these results were tested with. But here's also the thing. You will notice that there are going to be exits that also are going to be losses when a couple other of the criteria is met, which is our exit criteria, which is, well, I'll give it away right here, but PMARP above 65 percentile or BBWP above 80 percentile. Both of those would also close the trade. And if it's at a loss, it's at a loss. That's really going to happen mostly when volatility represented by BBWP is higher. But yeah, anyways, on to the next one. How will positions be entered? PMARP must be below 20 percentile. And that is, by the way, the Let me just double check over here. I believe that is the plot line, but I do want to double check here. Yes, that is a signal line. That is a signal line. Must be below 20. So very, 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 very low. And I'm actually going to write this off over here. Plot. There we go. The BBWP moving average must be negative. So from the prior close to the current close, there must be a decrease in the moving average for the BBWP. So what does that look like? Well, over here, let's say we're analyzing like this closure right here. The moving average, the white portion of this chart, or the white line on this chart, the prior close number, which is represented at the top left-hand side at 94.29%, to the current should be a decrease. And well, 94.29 to 93.65 is a decrease. So yes, that condition would be met in this particular case. And then we need to see, this is actually not correct. I don't know why I have that in there, but that is also not it. Why was this not included? BBWP must be below, I believe it is 50. So let me just double check on this one as well. So BBWP, let me just see. Yes, indeed. BBWP itself, just not the moving average, but just the actual raw read on this one should also be below 50. So in that particular case where I marked it off over here, it's above 50 percentile. So that would not be the case. But let's say when it's below, which is just the midline right here, like in this case, obviously it is below, and we see a decrease in the moving average. Probably don't have to measure that one out. You can see that one very obviously. So yeah. Not an entry right here, by the way. Just that condition is met. Anyways, okay, moving on now. How positions be exited? Kind of already gave that one away, but PMARP, in this case, I believe plot line. Let me double check on this one as well. And why is my damn thing obsessed with doing capitals or caps lock? I must have that on somewhere. Let's see. Okay, we have our PMARP for the exit. Is going to be what? Is going to be plot line, yeah. And then our BBWP for the exit is going to be just straight up raw BBWP as well. So 80 percentile and 65 for the PMARP plot. And then that's it. Now there are some skeleton key specific settings right here. This is the automation features that I spoke about earlier that this was tested with. Now again, you could employ this yourself. It's just, it's gonna be some work, I guess, but you can definitely do it. And do understand that this particular strategy, in the way that it was tested for the past over 3 years now, was omitting results from Thursday and Sunday, meaning that it does not trade on those days, meaning that if you see the entry conditions met for those days, don't fucking take them. Also for GMT -7. So, it's gonna kind of help with timing that. But overall, even without that, well, let's actually see how that would change it. So let me actually add this right here. Keep it in mind, or I actually have to generate the report again, but you can just scroll back and figure out what the results were prior to that. I'm going to guess that they're going to be worse here. I believe the net profit beforehand was 19,000. And that was based off of just one Bitcoin position size. Yeah, and that completely wrecks it. You can see it pretty much gives up all the gains in 2022. Back down to zero. So this strategy becomes unusable, or I wouldn't say unusable, but it's certainly not good if we include Thursday and Sunday. So this is very common for most long strategies on lower time frames. Thursday and Sundays do not have great results. Just as a general rule, you kind of want to be avoiding those days. I found if you're looking at long strategies, if you're looking at short strategies, you certainly do want to incorporate them. But again, let's now compare that with omitting Thursday and Sunday, and let's see what we got right here. Come on, baby, load it up. That's probably the worst thing about the strategy backtester and skeleton key, is that sometimes the loading times can be a little bit more. But there we go. Much better. Much better. Significantly different, like night and day. So that certainly does matter. Anyways, I think that's a good place to leave off for this strategy. Just pretty fucking simple right there. I guess we can go over one entry and exit just to go over the conditions, but In this case, first things first, are we on a Thursday or Friday? No, this is a Tuesday. We can see already that, I think it was like right here. Let me just double check. Yep. We can see that PMARP is below the 20 percentile region, the moving average that is. We can see that the BBWP is below 50. It's right there. It's like literally just below the dotted line, which is 50. And also the moving average from prior close, which was 59.92 to the current is 56.98. That condition is met. It's negative. So we have an entry right there. And then, well, what happens after that? Our take profit conditions are met because actually almost both of them are met, but only one of them needs to be met. In this case, it is the PMARP condition that is met, as it does close above 65 percentile. If that condition was not met and the BBWP condition was met, then we'd also close as well. Just one of them needs to be present. In this case, the BBWP condition was actually met on the next closure. You can see that was above 80 percentile. On the current one, it was just below. So it would have exited right here. So slightly not as good. Anyways, just kind of a quick scalp, as you can see. And I think that's a good place to leave off on that. We can go check out some Bitcoin action here too, just because why not? Still looking for a bounce on Bitcoin first and foremost before anything, probably back up to 44,500, maybe even tags 45,000 bucks. But I do believe if Bitcoin's going to see another rejection, that'd probably be the area to be looking for. So yeah, probably happens early this coming week, and then if downside resumes, probably later this coming week. So yeah, we'll end things right there. As always, I want to wish you the best. Oh, and I should once again reiterate my major failure criteria for yesterday's video. If Bitcoin's back above 46,500, especially on a daily closing basis, it's fucking bullish. But until then, bounces are just that, bounces, before getting ready for some downside. And I expect that this next phase is going to take a few weeks. So yeah, that is where we'll end off today. Nice and short and sweet. I'll see you on Monday, hopefully. And as always, wish you the best. Take care, much love, and see you hopefully soon.